Hey everybody, welcome back. Happy belated Thanksgiving from all of us here at ChatArgos. My name is Patrick Tan, General Counsel for ChatArgos with the blockchain intelligence firm made famous for outing Binance's $1.4 billion BUSD under collateralization. Thank you for tuning into the podcast. And we're here with you every Friday. With me, as usual, is my CEO and Chief Data Scientist, Jonathan Reiter. Thank you for taking the time out of your busy schedules to tune in. So we've got some interesting stuff to speak to you guys about this week. So three things. We're going to talk about Bounce Finance, not Binance. We don't spend every week talking about Binance, but we will speak about Bounce Finance and the hack that happened there and what that means. You guys have been asking about the 7.5 billion USDT that appears to be heading into Kraken.
There's no quotes. It does moving there.
Yeah, I know. But we'll explain why I put it in quotes shortly, because it's not like it's being sent there. There could be like a different mechanism, which is why it's not in the way you would think this happens, and we'll have a bit of explanation about that there, and that's probably the most logical explanation as to what's going on. Finally, we are talking about Binance, but we're talking about Binance in the context of Binance rubles, failed KYC, FCA licenses across multiple jurisdictions. He wrote a bit more of a difficult to read piece about that on Medium, and I rewrote it to a way that is like a 5-year-old could understand. Basically, I could understand, and we'll talk a little bit about that in terms of like what all these money transmitter licenses mean in different jurisdictions, and why you should pay attention, simply because money transmitters are not regulated to the same level of banks. And, there are obvious loopholes as a result, and why that could be a problem. So let's just jump straight into Bounce Finance. First, Bounce Finance, going to bring up that tweet here. We tweeted about this a couple of days ago, I think. Just a couple of days ago. Just to be clear, we're not the ones who broke the news about the Bounce Finance, the DDoS attack.
I think it was PeckShield published the weird 70 ETH gas fee paid back from the guy that paid it. Yeah.
So, but we were the ones who then noticed that the new contract was not verified and published no API. So, John, you tell us a little bit more about
so
that.
There was some kind of an event here, and there was a very weird transfer of 70 ETH, something like they paid a very high gas fee to the block builder, who then paid the money back. So, actually, what I find interesting is the large evidence of the possibility of block builder type collusion with bad actors, which you have to trust the guy building the block in some sense. And if you allow out of band payments, and paying you 70 ETH on chain to receive them back at the same time is effectively an out of band payment, because that agreement was made outside the protocol. I didn't just bid in an auction or something like that. So they were then hacked, or some security incident, whatever. They used to have contracts, and the contract they switched to isn't a published contract. So you have to do some decompiling of the ABI to start to figure out a bit of what's going on.
Okay, so for those people who are not technical,
I was just going to give you
what is that?
Okay, so smart contracts are published Ethereum, whatever. The binary data that is published for the contract is not actually usefully readable by a person. What you normally end up doing is submitting to Etherscan or whatever, some other service, the code, and Etherscan confirms the code you submitted compiles to the same binary whatever blob, and then it's comfortable saying, here's the code. So all that code you're reading on every system that does this is code that was submitted independently from the chain, and someone verifies, compiles to that. That's because, generally speaking, it's not possible mechanically to convert compiled code into human readable source code like a person would have written. To some extent, you can extract the logic. The problem is the function names, variable names, and whatnot usually disappear because the computer doesn't care what you call the variables. And figuring out what's going on in reasonably complicated logic, even frankly not that complicated logic, with no names and no comments, is very challenging. Anyone that's done any programming, anyone that's built a complicated Excel spreadsheet has experienced that problem. So most major services publish all their contracts. It's usually at least a little bit suspicious if the contract's not published, certainly if it's a larger service. It's particularly surprising when something that used to have a published contract doesn't, reverts it, whether that's the hacker or them taking some measures or an oversight, whatever. But it was interesting to see weird possible collusion-y type out-of-band payment stuff, some kind of hacking incident, and then the contract changing to something. We can figure out some of what's possible on the contract, but only given that binary data, you're going to struggle to submit function calls that are really useful in general. And in some cases, you can make more progress than others. It depends, not even so much if they're trying to hide it, but what they're trying to do. If it's a very, very simple operation, you might be able to figure it out. A lot of these forwarder contracts, you can probably figure out. We've had some luck. So it's an interesting example that shows two of the kind of, oh, you're being too pessimistic, that's not a realistic problem. Not two of those things happened in the same place. It's starting to show that a lot of this stuff is really much more common. I suspect a lot of this has been happening. I know a lot of this has been happening a lot more for years, just in smaller amounts of money.
That's exactly what I was going to say.
Or if you're running some kind of a dodgy service for dodgy people and your ABI goes dark when you steal the money right before leaving at the end, does anybody really complain about it? Sometimes the answer is no.
So what I've been made aware of is that this is actually a lot more common than people recognize. So that because, like, let's say for instance, if the protocol only ever had a couple 100,000 in it, in the smart contracts, and when they steal it, it's just not.
A lot of these small level scams.
Yes.
The contract code is never published. Again, of course, the contract itself cannot be upgraded, so it's a redirection. You steal the keys so that you can publish the redirect.
There's a special name about this, which we know. It's called a drainer.
Oh well, okay, that's a different sort of a
Yeah,
Anyway,
but that's actually something that we've been told that you can actually.
Shout out to one of our listeners there.
You can go and contract people to build drainers for you, and then you just build the front end. It's a whole thing, right? So, okay, moving on. Let's talk a little bit about the 7.5 billion USDT that appears in Kraken, because there's been a lot of confusion about that.
These
so
are flows of USDT on chains publicly to Kraken associated addresses. So
Correct.
That's what I mean by appears is not the right word. It's a true thing.
Yeah.
Okay, so the simplest explanation for what's happening here, and would explain partially stuff that's been happening for years involving Kraken and other counterparties. Let's imagine that Tether has an account at Kraken. I'm not saying Tether literally has an account at Kraken, but some intermediary, some broker there, somebody they deal with, some guy, some friend, somebody that used to work at Alameda Research, whatever. It's an account there, and they are effectively part of Tether, and they receive unbacked, freshly minted, or whatever, USDT tokens, unbacked. But they're part of Tether. Tether can own unbacked tokens without any trouble as long as they keep it to themselves.
Yeah.
If they simply go on an exchange and sell them for dollars, and
That's
send
okay.
those dollars into the reserves, is fine.
Yeah.
When you sell the tokens at some point, they're unbacked, and then someone gives you the money, and then they're backed. So as long as the transactions before they receive the dollars are inside the Tether perimeter. So lots of Tether has been issued for quite a while now, swapping other tokens in for that or whatever. And the simplest answer for a lot of what's happening is that Tether does not differentiate in a publicly visible way which tokens are backed and which are not.
Yeah.
But that they've been issuing unbacked tokens to themselves, which is not wrong, and then selling them for dollars.
Correct. So
if something like that's happening here, that would make a lot of sense.
So they have this policy where they mint, but they don't. What was authorized but not
That's
issued.
right. So the issuance of the tokens, the creation of the tokens, they have never claimed is directly linked to their receipt of dollars.
Yes.
Because they have this treasury process where tokens that are not even supposed to be backed are sitting. If in their minds the treasury consists of certain on-chain addresses and the contents of certain account balances on exchanges and whatnot that they also control, again, I'm not going to talk about if it's that entity, different entity, whatever, that they control, those are also kind of in the treasury. No one's ever been able to exactly recreate which Tether are and aren't backed. They're supposed to be backed. They're in the treasury or authorized, issued, whatever. And that would be, again, fine. It would be very difficult for them, I think, to explain this at this point because they claim they only ever issue tokens in exchange for dollars.
Yeah.
And because there's no publicly visible way of seeing, oh, there's 500 million Tether on this particular exchange. 375 million of them are in Tether's account and don't need to be backed because they haven't been sold yet. There's no way to see that. In theory, they could ask exchanges to give them dedicated addresses. That's not going to happen. They'd have to then admit what they were doing. And again, I'm going to defend Tether a little bit on this one.
Sure.
I think if they said they were doing something like this that actually was okay and involved unbacked tokens, a lot of people would go nuts immediately without actually listening to what's happening. When you mint tokens, it's just a computer. They're never backed. So I suspect something like that is what we're starting to see. Maybe this is the old way they did things. I mean, Kraken has a more mainstream and larger payment network because it's been around for a very long time than FTX Alameda did, at least for a while, pre the Signature, Silvergate, whatever stuff. So probably they have better ways to get money in. I mean, their website lists a dozen different ways to deposit cash.
And that's the thing I think a lot of people are struggling to understand. Just because, I mean, it's fine to issue yourself a quadrillion amount, like tokens of Tether, and as long as you don't try to use that quadrillion to, like, say, buy an aircraft carrier or something, like you use it, you're selling those tokens.
Right? You have to sell it.
You have to sell it, which honestly, it's fine.
The way a stablecoin gets backed is you sell in back tokens for dollars and put them in your reserves. That's the mechanical.
And if you could sell them on Kraken, which is what we had observed and what some of you had pointed out as well, if you could take one Tether and sell it for like $1.01, you've already made 1%.
Yeah. Now again, it doesn't need to be, well, okay, I mean, you can see what the prices are, so there's not huge amounts of...
Correct.
There's no big arbitrage or fee intermediation going on here. It's possible that these are agents of theirs who are extended credit, post-collateral, whatever. So let's say I'm a guy that's going to go distribute a bunch of Tether, and my slice of the market, it's a franchise, right?
Yeah.
So your McDonald's is in this city, my McDonald's is in this city. My franchise is, let's say, Kraken. It's this exchange. I post you $20 million of collateral wherever, and then I just get a revolving credit line of as many on back Tether as I want, up to $20 million, which I go sell, remit the dollars, keep the process rolling. Something like that is the standard method for distributing products in most of the world. It's how oil distribution works. Okay, something like that's probably what's happening, and the flows that we're seeing now, because Kraken's the only place left that likely takes a lot of these customers and can do dollars and can do these tokens. Like, FTX is gone, Binance is gone. There are a bunch of exchanges.
But Binance is still around.
Well, okay, but I mean, not the U.S. presence with the dollar banking and whatnot is gone. So there are not that many other choices.
You can't really kill Binance's ideology. Anyway, so speaking of Binance, that segues into our final topic for this episode: Binance, rubles, and failed KYC. So we wrote, both of us, a Medium blog post. You should go check it out. You should read whichever one you want. They're the same thing. But you should have a look at that, because one of the things that we noticed is that there's this whole ecosystem of licensed entities that are licensed to carry out...
or X-license.
Or X-license, to carry out money transmission across mainly Eurozone.
Yeah, that's been the real challenge. So this only interacts with Binance because Binance happens to use some of these payment providers.
Correct.
Lots of people use payment providers.
And I want to, and I can name names because it's in the article as well. But we can Add Cash is one of them, and Mercurio.
Add Cash is used by lots of people.
Correct.
So these are somewhat known names. The thing is that they are connected to networks of payment providers, primarily in Central and Eastern Europe. Some of which, this is not like we're saying they're a bad actor. The Lithuanian government said they were sanctions, whatever. They were shut down. Their license was revoked. And what you see in a lot of cases, the company names and details and whatnot are in the posts. You see companies that have a license in, say, Estonia, Lithuania, whatever, Greece, doesn't matter. There's lots of examples. And they have a UK license.
Yes.
The UK is not part of the European Union or the Eurozone. In the old days,
Brexit.
having a UK license got you banking throughout the EU through a thing called passporting, where licenses in one... Actually, I should do it briefly. So for people who are in the United States, you're used to the concept that driver's licenses and stuff generally across states have to be recognized. The European Union has a similar concept, where if you have a securities trading license or whatever, generally speaking, you can offer those services throughout the European Union. That was one of the big pitches in the 1950s at the Treaty of Rome in the 1960s about founding the European Union, so that you could do these things once and then operate throughout the space. So now your UK license is totally independent of the rest. Fine. They've always been a little bit. The UK's not part of the Eurozone. A little bit difficult rule-wise. We have plenty of documented cases now where people with EU licenses in, say, Estonia, Lithuania, whatever, have the licenses taken away for what the government says is bad behavior. And in one case, we go through the documentation for it's not even bad behavior. The government is I'm going to say alleging because it's a Google translated document from a language I can't read,
yeah.
but whatever, is alleging that they lied about who they
Yeah,
were selling the
basically-
business to, and they canceled the license.
So essentially,
That's not good.
even before that, they lied about who the UBOs were.
Yeah.
And if you trace back, actually all of these companies are kind of owned by a holding company called MRCR. It's in the blog post, and that's a Cypriot company.
Yeah, so we don't know exactly who owns the stuff, but it doesn't even really matter.
It doesn't matter,
The point
yeah.
is simply that you've got inconsistent application of some of these licensing deals. There are companies here that have collaborations with U.S. licensed entities as well. So you have people that had an EU license, probably used that to get a relationship or a license, whatever, in the UK or the US, and then that license was taken away for bad behavior. And there does seem to be a big disconnect across regulators for a lot of this. If the Lithuanian government pulls your license because of sanctions violations, you'd expect your affiliates in other countries to experience at least an investigation. We're not saying this is right or wrong. It just this is what
So-
you think the world works like.
So to maybe help put an analogy that maybe it might be a bit easier to understand, I have a pilot's license. Now let's say I was on a plane that crashed. Everybody else died except me. I still have my license. Now, obviously the country that license was issued in is going to have some problems with me continuing to maintain that license. However, if I already had that license recognized in another country, that other country or that other aviation authority would definitely want to investigate my ability to continue to fly planes in that country or operate aircraft in that country.
Actually, that's probably the industry in which this stuff works best.
It is, because it's a life and death kind of thing.
And the people are physically there, so you can really survive.
And also, if you blow up a plane, kind of everybody knows who you are.
Well, and you have to go through an airport where there's a bunch of anyway. So there has been. We saw this historically with, again, sorry to pick on, which is Binance and BitMEX that had entities in the Seychelles that they were still claiming to have bank accounts in the U.S., but those entities didn't exist anymore.
Yeah.
You're seeing that with licenses, and I think we have lots of cases where people are saying, "Oh, this is a legitimate licensed business," and actually it isn't at all. The affiliate they're still processing their payments through, or that's doing their KYC, or whatever it is, was shut down in some cases
And-
quite a while ago. That's going to come home to roost pretty bad, particularly when you're still routing payments through somebody that lost their license for sanctions violations that's still doing sanctions
And just to be
violations.
clear, right, this isn't even a crypto thing. This is a like a...
Oh, yeah, there's very
it's
little
n-
crypto.
Yeah, it's
There's
not
very
even a
little
crypto
crypto.
thing.
Yeah, yeah.
This
Yeah.
is like a... It's just a,
I mean,
a
all of
money financial,
All the crypto
cross-border
services,
transmission
most of the
problem.
crypto services
Yeah.
interact with whatever payment providers and banks, and it's long known that they tend to be somewhat dodgier, smaller, lesser known, whatever payment providers than most people in normal mainstream finance are used to. And that's starting to connect to stuff that's really not fantastic behavior, which is a problem for you if your business depends on this thing. And, you may or may not. What happened with FTX is a bit of a, it's traditional white-collar crime. Whether or not you could see it coming, whatever, people steal money, those things happen. That's okay. And then you have a bankruptcy process, and if you rely on a payment processor that gets shut down for,
that
North
could be a
Korea,
problem.
whatever, you get no advance warning, they're closed, and that's just the end of the conversation. And you can go through an insolvency proceeding 3 years from now when the guy's in prison.
Yeah.
But, it doesn't, that ends differently than normal finance has. And people who work in normal finance are used to credit risk and banks with issues. You're not used to being told that person is completely gone, will never respond to any messages ever again, and it's not the Treasury Department that wants to talk to you, it's the Justice Department. It's a different type of risk that's starting to manifest itself that is something to pay attention to.
So oftentimes what we've seen with a lot of these payment services providers is that part of their competitive edge, so to speak, is that they'll serve people that, like, your other payment services providers wouldn't serve. So like casinos, porn sites, whole bunch of other stuff that Wirecard used to do.
One of the businesses in that orbit is the people who
Correct.
bought the actual
the
Wirecard business. Yeah.
No, and that's because and again we it's not for us to judge, but these services need payment, and this is who they have to deal with. But these are the hidden risks if you're not looking. And one of them, of course, is as well crypto casinos and crypto exchanges, which are using these facilities. So how it's relevant to you guys if you're trading crypto? This could be something that it just comes out of left field that you totally didn't expect.
I mean, the payment providers, if your payment provider is dealing with marginal people, less KYC, whatever, accepts documents that maybe not, you may think the bank KYC is wrong. The bank may be wrong. The bank may be too difficult, whatever, and you may be a good actor. The problem is that provider will also inevitably end up banking more bad people than the fraction who get through the net at places with more rules. I'm not even saying the rules are right. I'm saying when you have fewer rules, you're going to have more bad people getting through them because there's fewer rules, and that increases the chances of difficulty. Okay, I mean, there was a non-zero amount of bad stuff happening in every financial institution in the world, but if 1 basis point of your customers are dodgy, or I believe one intermediary we looked at a couple days ago, roughly 40% of the volume we saw was associated with sanctioned addresses. There ain't no bank, except for, what was it, Banco Delta Asia in Macau that was shut down.
Oh, that was a long time ago, though.
Yeah. There isn't much of this stuff going on in normal finance. Some happens, right? So it's going to be interesting as people start to have documented cases of double-digit percentage dodgy behavior, and that's a floor, right? It's not a ceiling.
Yeah, exactly.
It's going to be interesting to watch some of this stuff get disassembled.
Dismember is probably the... So anyway, on that note, thank you for tuning in. Thank you for all the comments. Don't forget to comment, like, and subscribe to the video. We promise you we are working on a podcast. It's in the works.
Audio-only version.
Audio-only version.
Yes.
You know, we're kind of inundated here right now. Things have really picked up. But we appreciate your comments. We appreciate all the feedback. Thank you for watching, and thank you for listening, and thank you for tuning in. We'll see you again next week. Happy holidays. Have a great weekend. Bye-bye.